so that using that every year with that 5% withdrawal rule, I'll be getting 2,000, and that 2,000 I'll put yearly in gold ETF, and 35,000 I'll put it in mid cap, which is mutual funds. Put it in FD, so that using that 72 by interest rate rule, by 6 years I'll double the money in that way. And then every using that 4% withdrawal rule, I thought I'll put 5%, and every year with that 5% withdrawal rule, I'll be getting 2,000, and that 2,000 I'll put yearly in gold ETF, and 35,000 I'll put it in mid cap, which is mutual funds, and then penny stocks and all of that I'll be investing 5,000. Blue chip stocks and all of that mid cap I'll be investing 15,000, and 5,000 in savings account.
Okay. Have you written somewhere?
Yeah, sir, but it's not that clear. I've written it in a book, but
okay, just send me. I'll just take a look. Send me. What's
1 second. So just a second. One second, sir. Sir, it's not that clear, but
okay? Just send me. I'll just see.
yes, sir.
Okay, so 1 lakh out of 1 lakh 20,000 you will invest in blue chip stocks, right?
Yes, sir.
Then
No, in that 20,000 also I have divided into what to say 15 and 5, sir.
okay,
In which 5,000 will be in penny stocks and 15,000 in blue chips and whatever you suggest, and then mutual funds 35,000, and
no,
then
1 second. Out of 20,000, 5,000 you are investing in penny stocks.
yes, yeah.
So out of 1 lakh overall you are investing 20,000 in stocks, right?
Yes, sir.
Okay, but you have not written how much you are investing in blue chip.
So I need to specify on how much I am.
Yes.
Be.
Wait, 1 second. I'll explain you. You can see my screen, whatever I am writing.
Yes, sir.
Okay. So 20,000 you are investing in stocks, right?
Yes, sir.
So this you have to segregate in some percentage in blue chip, okay? Some percentage in mid and small, right?
Okay.
And some percentage in penny stocks, right?
Yes, sir.
Okay. So what you have to do is that you should invest 50% in blue chip. That means 10K should go in blue chip, okay?
Okay, sir.
And for mid cap and small cap, how much I have said? 30%, right?
Yeah.
30% or 40%, whatever you feel, you can do it. So let's take 40%. So that will be 8K, right? And remaining 2K you can spend in, you can invest in penny K, because penny stocks are the very highest risky ones. They can become zero also, and they can become multi-baggers also, right? So we should try to put the least amount in penny stocks. So this is how you should segregate 20K, because the maximum amount you should try to keep it in blue chip stock, right? right?
Yes.
So like that you can do. And if your risk appetite is more, what you can do is that you can put 5k in 5k in blue chip stocks, okay,
Yes, sir.
and 13k in mid and small cap, okay.
Okay.
If you if you want to invest for more than 5 years, then you can do it in mid cap and small cap, because minimum 5 years are required to grow these stocks, mid cap and small cap at least, right? So if your risk appetite is more, 13k you can invest in mid and small cap. 5k you can invest in blue chip, and remaining you can invest in
Penny.
mid. So like that you can invest. And if you are the least risky one, then 50% you do in blue chip, 30-40% in mid cap and small cap, and remaining 5% or 10% in penny stock, right?
Yes.
Okay. So this is about 20,000. So remaining 80,000, what you will do?
Sir, I'll be investing 35 to 40,000 in mutual funds, which is large cap.
Okay, 35 to 40k in mutual funds. Okay, fine.
So this is purely for investing, no, sir. So I haven't put anything in savings.
Yes, it is purely for investing. How you will do the capital management. So I gave you this homework so that I know how you are doing the capital management, right?
Then it will be 40,000 fully for mutual funds, sir.
Okay.
And then the rest of the 40,000, I'll put it in a FD or debt account, so that with that interest rate of 12% to 14%, I've taken the interest rate to be least, so 12%. With that 12%, my money will get doubled in 6 years.
No, but FD is giving you, if you take a real time example, FD is giving you maximum 7 to 8% only, right?
Sir, then that 12% was for which one, sir? 12 to 14.
12 to 14 is for mutual funds.
Which I've already put into.
So this 40k you will be getting around 12 to 14% of return every year, right?
Okay.
But remaining 40k, whichever you are putting in FD, fixed deposit is only between 7 to 8 you will get, not more than that. Okay.
Okay.
If you
So I
72 divided by 7, then you will get 10 years. So in 10 years, right? 10 years your money will double. Okay.
Okay, then I'll then change it, sir. Then I'll put 30,000 in FD and then 10,000 in gold ETF, sir.
Fine. That is fine. Okay, so now you have covered everything. And debt fund, how much you are investing in debt fund?
Oh, debt fund, I didn't think about it, sir.
Okay, so what you can do is that whatever you are thinking 30k in FD, now what you do, you split this amount in two parts. First amount you can put it in FD, maybe 15k you can put it in FD, and remaining 15k you can put it in a debt fund.
Yeah. Okay, sir.
Because see, in FD, let's say you have taken an FD of 3 years. So if you break it before 3 years, then your interest rate will reduce, right? But in debt fund, you can take out your money anytime.
Okay, sir. Yeah, got it.
Okay. So like this, you can do your capital management if you want to do investing for if you have 5 years, 7 years, 10 years, like that, right?
Yes, sir. And sir, one more. Since I'm investing in mutual funds, 40,000, like I'll have to take out per year, what to say, that withdrawal rule.
You can use 6%. Can use
Okay.
6%.
After taking out that, which would you? I mean, where would you suggest?
So that money you are taking out, that you can use it for for your daily purpose thing, right?
Oh, that okay, sir.
Like if you want to spend somewhere, or if you want to buy something, or like that, right?
Yes, sir. Got it.
So 6% of 40k will be how much? 2,400.
400 years.
So that will be like 200 rupees per month. So that is a kind of pocket money, like if you are a children or if you are a kid, so like that you can plan your pocket money. So on one side, your money will keep growing, and on the other side, you will be taking out some monthly expenses from that money, right?
Yes, sir.
So you have to cover everything actually whenever you are doing an investment, or if you want to do a financial planning for yourself, you have to see the risk and of rewards, and you have to see how you can get the money for your expenses also, right?
Yes, sir.
Fine, this is clear.
Yes, sir. Got it. Sir, but 20,000 for stocks is a good rate or what, sir?
That is fine. You can see it depends on your risk appetite. So you want to do it. It depends on how much you want the interest rate every year, how much return you want. So it depends on that. So you have to do it in small chunks. You should not do it in one go. You should not invest 20K in one go, right? You should split it at least like 2.5K in one stock. So like that, you should split it, because if you get stuck in one stock, then at least the other stock is going to give you some return. But if you put everything in one stock, then if you get stuck in that, then you won't be able to get return from
Yeah.
different. So
Yes,
that is why you have to keep your portfolio distributed across all the these sectors and type of stocks, right?
yes,
Fine, this is clear.
yes, sir. Got it.
Okay, we'll start new day. Any other questions you have from the previous session? No, right?
Sir, and for FD it is 7 to 8%, sir. For debt account, what is the interest rate, sir?
It is similar to like FD 6%, 7%, 8%. You can see it. It is not fixed. It is not fixed, but the money will not like. It is safe to use it in debt fund. I'll show you some examples. These are the types of debt funds, right? You can see it, right?
Yes, sir.
So the thing is that in that fund, there are various categories. If you want to park the money for 1 month, 1 week, or you want to park it for 1 to 2 years, so like that you can do it, right? Depending on the duration
So,
you want to do it, right? So this can be a corporate bond, or a banking or PSU fund, or it can be a the guild fund. These are backed by government securities, right?
yes, sir.
So these are the funds. You can see that so many companies are offering this fund, right? You can see that
Yes,
Aditya Birla Sun Life Medium Term Fund, the last 1 year it gave 14% return, right? You can see the return here also.
uh,
Based on that, you can choose.
sir, what does that, I mean, if you go top, it is there that overnight or 1 week. How is that?
So see, let's say you don't need, you have some money in your savings account, let's say 50,000. So in savings account, you will get only 3% of return every year, right? So
Yes, sir.
what you can do is that instead of putting in savings account, you can park it in debt fund for 1 week or 10 days like that, right? So let's say you
That
want to pay the fees of some your fees in next month, right? You want to pay your fees next month, like 50K. So instead of putting in savings account, what you can do is that you can park that 50K in a debt fund for 1 month. Then after 1 month, whatever money you will get, you can pay the fees, right? So at least you will
how much will it increase, sir?
see. It depends on which fund you are investing. See here, I have shown you the interest rate, right? For per year, it is giving you 14.58. So 14.58 divided by 12.
Okay, 1 point something.
Divided by 12, approximately 1%, right? Approximately 1% you will get in 1 month. But if you put in savings account, you will get 3 divided by 12, approximately 0.2.
Okay.
0.25 is nothing, right?
Yes, sir.
That is how you can take benefit of these debt funds,
Mm. Okay.
right? So you have to see like when you need that money. Based on that, you can decide for how much duration you want to keep it, right?
Yes, sir.
Fine, this is clear. These are the debt funds
Yes,
you
sir.
can see that, right?
Highest return Birla has given.
Highest return is that, but you have to choose you should try to do some standard one, right? See this. Don't choose the private one. See, HDFC is good, Nippon is good, right? SBI funds are
Okay.
good,
Okay.
and you have to see the expense ratio also. Expense ratio is a kind of brokerage they are charging actually. So you should check the expense ratio also while choosing the funds.
So if it is 0.86%,
It is more.
the out of that 14.58%, they will remove.
So there is a fees charge actually. They will charge the fees. Right. So
That's
you
per
should try
year.
per year. So you should try to choose the one which is having the less expense ratio. Right?
Yes.
See, normally what people will do is that they will not. Most of them will not know about what is expense ratio. So what they will do, they will directly see the return only. Right. So this fund is giving you the most of the return, then they will invest in this. So you have to see the expense ratio also.
Sir, but talking about expense ratio,
Uh,
suppose they are investing in Aditya Birla.
mm.
Let us assume they are taking out 1% from expense ratio. It is still remaining top debt account only, sir. Like
No, it is
out of
not like that. It is not like that. But you have there is a separate formula to calculate it actually. So it is not simply like whatever return you are getting, they will subtract that. There are many other things they will calculate based on the profits and all those things, and then they will tell you how much they will cut it. So this expenditure includes management fees, distribution fees, and there are many other expenses. And if you see that apart from Aditya Birla, most of the funds are having this similar kind of expense ratio, except this fund. So that is how you can think planning to do the debt funds. Fine.
yes.
So we discussed about this instruments to trade, right?
Yes, sir.
So in this cash and indexes, they are traded on NSE and BSE. Okay, ETF also is traded on NSE and BSE, but for commodity and currency, they are different exchanges. For commodity, it is MCX. The exchange is MCX, right?
Okay.
And for currency, there are two exchanges. One is CDS, CDS, and there is one more exchange. One second. BCD. So BCD and CDS. So BCD stands for like this one. BSE. So this is an exchange on BSE, and CDS is basically for derivatives. So you just need to remember it. CDS and BCD. That's it. Two exchanges. Like NSE and BSE, similarly, currency also has two exchanges, CDS and BCD, and commodity has only one exchange, MCX.
Okay, sir.
So if you want to trade in these instruments, so you have to take the access. You have to ask request for access from the broker, right? So while opening the account, you might have got that option, right? That you want to to get the access from NSE, BSE, or
Yes, sir.
equity and MCX. So they will give you an option. Right. And apart from that, the mutual funds you can buy without demat and with demat also. There are two options. If you don't have a demat account and if you want to invest in mutual funds, you can still do it.
How is that possible without demat?
Mutual funds have a different concept that you can directly buy it from the AMC. AMC means like the companies which are offering the mutual funds like SBI, HDFC, and Aditya Birla, right? So that is from the AMC. So that is why you can directly purchase from them. Or if you want to buy it through Demat, you can also buy it through Demat. The only thing is that if you're buying through Demat, you have to pay extra brokerage of Demat account also. But if you're buying directly from the AMC, then your brokerage will be reduced.
Okay.
This completed, right? Okay, now we will talk about the sectors. So there are different sectors. I have explained you, right? Nifty 50 and Bank Nifty, right?
Yes, sir.
So apart from that, there are many other sectors. I'll show you. NSE indices. So there is a website called NSE indices. NSE indices, Nifty indices.
Okay.
So once you go on the site, you can see all the indices are present here, right? You can see
Yes, sir.
Nifty 50, Nifty Next 50, Nifty 100, Nifty 200, Nifty 500, mid cap, small cap, right?
Yes.
So the mutual funds, how they will invest? They will invest directly in these kind of indexes. If you see from the back end, if you see a mutual fund having a mix of large, mid cap, and small cap, large cap means they are investing in Nifty 50 and Nifty Next 50. Small cap, you see, there are so many indexes, right? Small cap 250, small cap 50, small cap 100. That means that every index is having that number of stocks. Small cap 100 means this index will have 100 stocks. 50 small cap 50 means it has 50 stocks in that. Okay. So apart from that, you have sectoral indexes also, like Nifty Auto, Nifty Metal, Nifty Pharma. So like Nifty Pharma means all the pharma related companies will be a part of Nifty Pharma. Okay. Nifty Auto means all the auto companies are a part of Nifty Auto index, right? So
Yeah, got it.
you can also invest in specific sectors if you want to do it, right? So these indices, Nifty Auto, Nifty Bank, and Nifty Healthcare, like that. Okay, so now we will go on Nifty 50 because we have to focus on Nifty 50.
Yeah.
So once you click on Nifty 50, you will get all the information about Nifty 50 from here. You have to see the back.
Your screen is still stuck in that presentation, sir.
Now you can see.
Yes, sir.
So this I got it from your fact sheet.
Okay.
So fact sheet shows about all the information about Nifty 50, how Nifty 50 is segregated, right? So here you can see that financial services are having 37% weightage in Nifty 50, right? So this is a
Yes.
weightage. So this is a weightage they have decided. IT is having 11.9% of weightage. Oil and gas are having 9.87%. So these are the different
Financial services meaning?
financial services like banks, like HDFC Bank, ICICI Bank, okay, Axis Bank, which are related to finance. So those are the financial services. IT means like TCS, Infosys, okay.
Yes, sir.
Oil gas like ONGC, Reliance Industries. Right? So this is how the segregation is done as a part of Nifty 50, right?
Yes.
And now you can see that the top 10 stocks of Nifty 50, HDFC Bank, ICICI Bank, Reliance Industries. HDFC Bank is having the highest weightage of 13%. So out of 100, 13% is being supported by HDFC Bank. Okay. ICICI Bank supports 8.95%. So this is the percentage they have done based on their market cap and the size of the company.
So it is advisable to invest in HDFC because they have
Top 10 stocks of the Nifty 50. Nifty 50 also has top 10 stocks, right?
Hmm.
So these are the top 10 ones. So whenever there is a correction in the market, based on that, you can plan to invest in these stocks.
yes, sir.
Because everything is price. You have to see the price. Based on the price only, you have to start the investments. Right?
Yes.
Fine. So this is a chart. It is showing Nifty 50. So this started in 1996. Nifty 50 they have started in 1996. I have explained in the first slide. Now they have started at 100 rupees. The index
Yes, sir.
they started for 100 rupees. Now it is 22,500. Okay,
Yes, sir.
fine, clear.
Yes, sir.
Now we will go to the site of NSE India. So there we will see about the stocks information. What are things we have to see while buying and selling the stocks. Okay. Did I explain you about the bid and ask?
Sir?
Did I explain you about the bid price and the ask price?
No, sir.
Okay. So this is the main site of NSE India, and once you go to market data, right? If you go to market data, you will find all the information here. Equity and SME market. Once you go here, equity and SME market, here you will see all the stocks, right? Here you will get the option. Nifty 50, Nifty Next 50, Nifty Bank. These are the indices, and if you want to see what all stocks are a part of Nifty Bank, then you have to click here and you will see all the stocks which are related to here, stocks and the price.
Okay.
Okay, so for each and every indices you can see from here, right? So this is the main site, so you should remember how to use it from here. Okay.
Yes.
Okay. So let's take an example of HDFC Bank here. Okay. So here you can see that. Okay, let me go to the. Once I click on HDFC Bank, then it will show me all the information here. Okay. So here it shows that the last price was 1765 when it closed on I think yesterday, because
Hmm.
today is holiday, right? So that is why the market is closed today.
No.
So yesterday's price was 1765. So here you can see the actual price of the stock. Okay, 1765.30. And apart from that, there are four prices: open price, high price, low price, and close price. For each stock, there will be four prices. Whether it is HDFC Bank or any small stock or penny stock, whatever it is, it will be having four prices: open price, high price, low price, and close price. Okay. So open price means every day once the market opens at 9:50, at the time it will show the open price. That open price can be anything based on the factors or based on the news or based on the events. That price can be
Hmm.
right. So that is the open price, and that open price is fixed for the whole day because it is at 9:15. That price will not change for the day.
Yes.
Similarly, we have close price, which is at 3:30 p.m. Okay, and high and low. So these are the two prices which will keep on changing during the whole day based on the buyers and the sellers.
Okay.
Right. So this is how it is. So based on the events, right? Based on the trading volume, based on the sale, or based on some technicals, this price will keep on fluctuating in the whole day between 3:30. Right. So here you can see that all the trade information, right? The traded volumes, the traded value, total market capitalization of this stock, right? Free float market cap. What do you mean by free float market caps? Let's say a company is having 100% of stocks or equity with them. Okay, stocks. Let's say they have 100% stocks. So what they will do, they will send some 90% to the market in which the small traders or small institutions can buy and sell. So this 90% is called as free float market cap. Remaining 10% they will keep it with them.
Okay.
They will not send it to market. So we cannot trade that remaining 10%. We can trade only the this 90% only. So this 90% is called as free float market cap. So you can see that this will always be less than the actual market cap. Okay.
Okay, sir.
Then we have to see the price information. Okay. So apart from these four prices, there are two more prices which are very important. 52-week high and 52-week low.
Oh.
So 52-week high means there are 52 weeks in 1 year, right? Approximately 52
Yes.
in a year. So that is why they are considering 52-week high and 52-week low price. So 52-week high means last 1 year high price is this, and 52-week low means last 1 year low price is this, right? 1880 was the 52-week high and 52-week low was 1426, right?
Yes.
And what is the current price? 1765. Okay, so you should always try to buy near the 52-week low price.
Okay.
In the concept, you have to see that because price is everything in this market. Price is the king. Based on the price, you have to choose the stocks. The stocks which are near their 52-week low, you should try to buy those stocks. Okay,
Why is that, sir?
because you want to buy cheap, right? You want to buy
Okay.
cheap and quality stocks. You have to focus first. The first thing is you have to focus on quality stocks. Second thing is you have to focus on the stocks which are cheap right now. Okay.
Yeah.
So let's say you are going to buy some foods on the market, right? You can see three shops are there, A, B, and C. Okay. First, you have to see the quality. Let's say all the three shops are giving the same quality of vegetables, right? But the price is different. Let's say shop A is giving you 9 rupees, shop B is giving 9.5, and shop C is giving you 10 rupees price. And they all have the same quality. Then which one you will prefer? You will prefer 9 rupees, right?
Yes, sir.
Because that is the cheapest one. So same thing, if you see 50 stocks, there are 50 stocks, right? So you have to find out which stock is cheap right now. That stocks only you should purchase. You should not buy expensive stocks. You should buy always the cheap stocks, but quality stocks.
Yes, sir.
Fine. So you have to wait because see the price will keep on changing whole year or 6 months or 3 months based on their factors, some economic factors, some sales and profits, right? So once like for HDFC Bank, the price is currently near the 52-week high. So what you can do is that you can wait for it to come near the 52-week low price. At that time, you can buy it.
Okay.
Okay. So that is why we have decided there are two zones in each stock: green zone and red zone.
Okay.
So we should always try to buy a stock in green zone. We should not buy it in red zone.
Okay.
Okay. Is this clear? 52-week high, 52-week low.
Yes, sir.
Any confusion in this?
Yeah, sir. God, it's clear, sir. Like, when to buy and what about selling it, sir? And when do we have to sell it? When it is in?
That I will explain you in the next step. Okay. So now we have to decide which stock is in green zone and which stock is in red zone. Okay. So how you will decide the green and red zone? So today what is the date? 10th of April.
Yes, sir.
Okay. So now you have to see the stocks. Which date is if you go in the back direction, if you go in the back side, which date is coming first? Whether it is 52-week low or 52-week high, which date is coming first?
Out of the December.
No. I want to go back from today, 10th of April, towards the back dates, right? So which date will come first?
December will come.
Right. December will come first and May will come later, right?
Yes, sir.
So December is 52-week high and May is 52-week low. Okay. So if 52-week high is coming first, that means the stock is in red zone.
Okay.
If 52-week high date is coming first. If we go from the back side, if we go in the reverse direction from today, the first date is coming as 52-week high date, right? Which is 9th of December, right?
Right.
So that means this stock is in red zone.
Okay.
Fine. Any doubt in this?
Sir, can you show any one example for green?
I'll show you. So this is clear now.
Yes, sir.
I'll look at that. So let's take an example of Hindustan Unilever.
Yes.
Hindustan Unilever. This first one, right?
Yes.
So now you see here. So what is the current date?
And 10th of April.
And which date is coming prior to this?
1st September.
March, right? March 25. 4th March 25.
Okay, I didn't see the years, sir.
You have to see the years also.
I thought it was 24. And
Date, see, in stock date, price and volume, these three things are very important. Even 50 paisa is also very important in stock market.
okay.
Yes. So first date is coming as 4th March, which is 52-week low, right?
No. Yes, sir.
And 52-week high is 3035 and 52-week low is 2135, right?
Yes, sir.
So that means this stock is in green.
Green.
So you have to see two things to find the green and red zone. You have to see the date and you have to see the price also. Both the things you have to see. And if both the things are matching, then you can buy the stock.
Okay, sir. So this stock is good to buy because
It is down from 52-week high. You can see that it is down from 52-week high and it is near to 52-week low, right?
Yes, sir.
So you have to see the stock should have moved up from 52-week low and the previous date has to be 52-week low. These two things you have to check before you want to buy a stock.
Okay, sir.
Clear?
Yes, sir.
This is very important. If you have any doubt, you ask me because this is a basic thing that you should know.
Yes, sir. So first we are supposed to check the date, whether it is near to 52-week low. If it is near to 52-week low, it is in profit. And if it is near to 52-week high, it is in loss. And then the second one which we are supposed to check is the price. Yes, sir.
Date also you have to check. 52-week low is fine, but you have to see the date. The first date should be near to you. The 52-week low date. See, you have to see both the things: 52-week low date and 52-week low price. Both the things you have to see. And even here also you have to see 52-week high price and 52-week high date also. Both the things you have to see, right? So this is how you decide whether the stock is in green zone or the red zone.
Yes.
So you should always like stock in green zone, not in.
Okay.
Clear?
So we need to buy stocks when it is in green zone.
Yes. Because if the stock is in red zone, we may not know when it should give return, and the return will also be less.
Yes.
Let's say you have purchased this stock at 3035. Let's say you don't know about green zone and red zone, and sometime back in September 24, you saw this stock price is 3335, and you will purchase it at that time. Okay.